morning, ladies and gentlemen. Vasil Dikov here from GDMFX, Senior Account Manager. We're going to be bringing you today the daily market outlook. We start with the North American markets. The events from yesterday: the Markit Services PMI was 3.7 worse than expected, and the Markit PMI Composite was 3.1 worse than expected. The new home sales month-on-month was 126,000 worse than expected, the lowest level since October. And the new home sales change month-on-month was 4.8% worse than expected. The Markit Services PMI Services Index came at 49.8, falling below 50 for the first time since October 2013. Economists have expected a reading of 53.7. A reading of less than 50 indicates a contraction. Investors have good reason to be worried. The services sector is the largest constituent of the US economy, comprising of 77.6% of the gross domestic product, according to the CI World Factbook. The Dow was 14 points up, the Nasdaq was 67 points up, the Dixie was down to 97.40 from 97.53, and the US dollar was down with 95 pips versus the Canadian dollar. This was the biggest mover. This week we will have the durable goods orders, excluding transportation, the initial jobless claims, housing price index month-on-month, that's today. On Friday we're going to have the GDP data. On the euro markets, no important events from yesterday. As a result, there was no significant movements either on the currency pairs, nor the German DAX or the French CAC. Today we'll be waiting for the EU CPI year-on-year and month-to-month, and tomorrow we're going to have the German CPI data. In the UK markets, the BBA mortgage approvals was 2,309, better than expected at 47,509,000. The CBI distributive trade survey was 2 points worse than expected at 10 points. Overall, the pound extended its losses for the week yesterday, touching $1.3879, a level last seen on March 2009. Currently, the sterling is the worst performer against the dollar, having lost more than 5% of its value this year. Investors and analysts are projecting the pound to drop to $1.35 in the upcoming weeks. The Brexit referendum will continue to weigh on the pound, and it's possible that even a vote for staying will not be enough to recover the losses sustained until the June 23rd. Today we'll be expecting the GDP data in the UK, which can give some short-term air for the pound or drive it even further down. The FTSE 100 gained 21 points yesterday and closed at 5,956. The pound was 240 pips down yesterday against the Canadian dollar, 210 pips down versus the New Zealand dollar, and 120 pips down versus the Swiss franc. Today we're going to have the GDP data quarter on quarter and GDP for the year. On Friday we're going to have the GfK consumer confidence. In Asia and the Pacific markets, the Japanese foreign bond investments was 659 million yen, better than previous at 1.974 billion yen. The Japanese foreign investment in Japan stocks was 121 billion yen, better than previous at 441 billion yen. The Nikkei 225 was 100 points up. No big movements on the yen yesterday. On Friday, we're going to have the Japanese oil industry activity. In the Pacific, the Australian dollar weakened for a third day, dropping 0.4% to 71.67 US cents after a government report showed business annual investment plans fell to the lowest level in 9 years. The Aussie was 70 pips down versus the Canadian dollar. The Kiwi was 115 pips down versus the Canadian dollar. Those were the two biggest movers. Today we're waiting for the New Zealand trade balance year-on-year and month-on-month imports and exports. On the commodities front, the EIA crude oil stock exchange inventories increased by 3.5 million barrels in the week ended on February the 19th. It was expected the crude stock rise for 3.4 million barrels, while the American Petroleum Institute late Tuesday reported a supply gain of 7.1 million barrels. The oil prices extended sharp losses from the prior session on Wednesday after Saudi Arabia dashed hopes for collective production cuts and following bearish industry data on US stockpiles. Gold futures rallied sharply in North America trade on Wednesday as retreating oil prices and steep declines in global equity markets underpinned demand for assets perceived as safer. The S&P 500 index had a range of 59 points. This is the 1,922 right now. Gold had a range of $33 at $1,240 right now. Silver had a range of 40 cents. It is at $15.29 now. The crude had a $2 range at $31.69 now. And natural gas is trading at $1.83 right now at the moment at a range of 0.7 cents. The natural gas storage change report is expected to show a withdrawal of approximately 122 billion British thermal units for the week ending on February 19th. And on Friday, we're going to have the Baker Hughes US oil recount. That is all for today. Thank you and have a nice day.